US stock futures fluctuate as investors assess data showing that jobless claims rose less than forecasted, while durable goods orders dropped. I'm on the line now with Daniel Hwang, Managing Director of Alternative Investments Capital Asset Management, to discuss this further. Now, Daniel, welcome to Dukascopy. The dollar has jumped to a 4-year high, precious metals are retreating, all signs are pointing to a strengthening US economy. Would you agree? And could this lead to an increase in interest rates?
I disagree with it because what we really need to focus on here are Fed rate expectations, and the policy signal from the Fed is going to be generated from the voting members. So with Yellen, Fisher, and Dudley are dovish. We expect Placer and Fisher to actually step down, and we should see those positions filled by less hawkish regional presidents. So the rise in the dollar, the fall in commodity prices, they're going to weigh on inflation expectations, and also in terms of the longer-term picture, what we're looking at is the U.S. unemployment rate. That is improving, but not as much as we'd expect for an increase in rates.
The US reports on durable goods orders and initial jobless claims were just released. Jobless claims increased less than they were forecasted, and orders for capital goods climbed more than they were forecasted. Now, how do you feel about these results? Were they what you were expecting?
Well, we don't really put much weight on weekly jobless claims. I think there's a lot of noise around these numbers. And once again, we do want to look at the unemployment rate and MSP more so. In terms of durable goods, this is just around expected by the market. So we did see a bit of a bump up last month with Boeing booking 327 airplane orders, which is a record. But generally, these are the numbers that we were expecting as well.
Now, looking to Friday and the release of the GDP growth rate, what do you think we're likely to see in this data?
I think we're likely to see GDP growth rate revised actually higher, bumps up higher, up to possibly 5%, mainly due to a strong increase in healthcare revenue. So we do think GDP growth rates continue to ascend higher, but overall, our main focus is on the Fed and monetary policy.
Thank you, Daniel, for coming on to Dukascopy TV. Great to speak with you. That's all from me for today. However, the Dukascopy TV website is regularly updated, so do stay tuned.